Hey, what's up everybody? It's the Stock Mart here. Today, we're diving deep into the world of candlestick patterns. These patterns are like cheat codes for the market, giving you a sneak peek into what's likely to happen next. So buckle up, because by the end of this video, you'll be speaking the language of candlestick charts like a pro. All right, let's kick things off with the doji. Picture this. The market opens, and for the entire day, buyers and sellers are locked in an epic battle. And then, bam! The closing bell rings, and the price ends up almost exactly where it started. That, my friends, is a doji, a candlestick, where the opening and closing prices are practically the same. It's a sign of indecision in the market. If you see a doji after a big uptrend, it could be a warning sign that the bulls are losing steam. On the flip side, if you spot a doji after a downtrend, it might signal that the bears are getting tired, and a reversal could be in the cards. Next up, we've got the hammer, a candlestick that screams, buy. This pattern typically pops up after a downtrend. You've got a small body at the top, and then this long, lower wick, like the handle of the hammer. That long, lower wick tells us that sellers tried to push the price down, but buyers drove the price back up. It's a sign of strength, indicating that buyers are scooping it up. So, if you're looking for a potential reversal signal, especially after a downtrend, the hammer is your best friend. Now, just like every superhero has their arch nemesis, the hammer has the hanging man. The hanging man looks a lot like the hammer, but it appears at the top of an uptrend. Imagine this. The market has been on a tear, prices are soaring, and then you see it. A candlestick with a small body at the bottom and a long lower wick. That, my friends, is a warning sign. That long lower wick tells us that sellers are testing the waters, and they're starting to gain some ground. It's like they're saying, hey, this party might be coming to an end soon. So if you're long on a stock and you see a hanging man, it might be time to tighten up those stop losses or take some profits off the table. All right, let's talk about a pattern that screams bullish reversal, the bullish engulfing. This one is a two candlestick pattern, and it's a clear sign that the bulls are back in town. First, you'll see a small red candlestick showing that sellers were in control. But then, the next day, bam! A huge green candlestick comes along and completely engulfs the previous red candle. It shows us that buyers were strong enough to completely erase the previous day's losses and then some. It's a powerful signal that sentiment is shifting from bearish to bullish. So if you're looking for a sign that a downtrend might be coming to an end, the bullish engulfing is a pattern you definitely want to keep an eye out for. Now, you probably guessed it, but just like the bullish engulfing, there's also a bearish engulfing pattern. This time, we start with a small green candlestick, showing some initial buying pressure. But then, the bears come crashing in and form a big, fat red candlestick that engulfs the previous green candle. It's like the bears just pulled the rug out from under the bulls. That engulfing action is a clear sign that sellers are now in control. So, if you see a bearish engulfing pattern after a rally, it might be time to reevaluate your positions. Remember, in the market, just like in life, it's always better to be safe than sorry. All right, let's move on to a pattern that's all about hope and new beginnings, the morning star. This one is a three candlestick pattern, and it typically appears after a downtrend, signaling a potential reversal to the upside. First, we've got a large red candlestick showing that the bears are still in control. But then, the second day arrives, and we see a small-bodied candle, either red or green. This tells us that the selling pressure is starting to weaken. And then, on the third day, bam! A large green candlestick emerges, confirming that the bulls are back in action. The market is rallying, and the morning star is shining bright. Now, just like every sunrise has a sunset, the morning star has its counterpart, the evening star. The evening star is also a three candlestick pattern, but this time, it appears after an uptrend. First, we've got a large green candlestick showing that the bulls are in control. But then, on the second day, a small-bodied candle appears, signaling that the buying pressure is starting to weaken. It's like the bulls are getting tired, and the bears are starting to sense an opportunity. And then on the third day, bam! A large red candlestick emerges, confirming that the bears have taken over. The party's over, at least for now, and the evening star is out. All right, let's talk about a pattern that's a clear warning sign for the bulls, the shooting star. This candlestick pattern looks a lot like the inverted hammer, but it appears at the top of an uptrend. Picture this. The market has been on a tear, prices are skyrocketing, and then you see it. A candlestick with a small body at the bottom and a long upper wick. That long upper wick tells us that buyers tried to push the price even higher, but sellers came in and drove the price back down. Now, just like the shooting star has its bullish counterpart in the inverted hammer also has its bearish twin, the shooting star. The inverted hammer looks exactly like the shooting star, but it appears at the bottom of a downtrend. Imagine this. The market has been in a free fall, prices are plummeting, and then you see it. A candlestick with a small body at the top and a long lower wick. That long lower wick tells us that sellers tried to push the price even lower, but buyers drove the price back up. It's like they're saying, hey, this stock is on sale and we're buying. All right, let's talk about a pattern that's a clear sign of bullish momentum, the three white soldiers. This one is a three candlestick pattern, and it's like watching the bulls march triumphantly up a hill. First, we've got a long green candlestick, showing that buyers are in control. And then, the next day, another long green candlestick appears, pushing prices even higher. And if that wasn't enough, the third day brings yet another long green candlestick, confirming that the bulls are here to stay. These three consecutive green candlesticks tell us that buyers are in complete control. Now, just like the three white soldiers have their bearish counterpart in the three black crows, the three black crows are the bears' answer to the bulls' triumphant march. This pattern is also a three candlestick pattern, but instead of three green candlesticks, we have three consecutive long red candlesticks. It's like watching the bears stomp relentlessly down a hill. These three red candlesticks tell us that sellers are in complete control. It's a powerful signal that the downtrend is likely to continue. All right, let's talk about a pattern that's a sign of hope for the bulls in a bear market, the bullish harami. This one is a two candlestick pattern, and it typically appears after a downtrend. First, we've got a large red candlestick showing that the bears are still in control. But then, the next day, a small green candlestick appears, completely engulfed within the body of the previous red candle. Now, just like the bullish harami has its bearish counterpart in the bearish harami is a sign of potential trouble for the bulls. This pattern is also a two candlestick pattern, but it appears after an uptrend. First, we've got a large green candlestick showing that the bulls are in control. But then, the next day, a small red candlestick appears, completely engulfed within the body of the previous green candle. All right, let's talk about a pattern that's a clear warning sign for the bulls, the dark cloud cover. This one is a two candlestick pattern, and it typically appears after an uptrend. First, we've got a large green candlestick showing that the bulls are in control. But then, the next day, a red candlestick appears, opening above the high of the previous green candle, but closing below its midpoint. It's like a dark cloud has suddenly covered the bulls' sunny day. All right, let's wrap things up with a pattern that's a sign of hope for the bulls in a bear market, the piercing line. This one is a two candlestick pattern, and it typically appears after a downtrend. First, we've got a large red candlestick showing that the bears are in control. But then, the next day, a green candlestick appears, opening below the low of the previous red candle, but closing above its midpoint. It's like the bulls are piercing through the bears' defenses. All right, everyone, that was a deep dive into the fascinating world of candlestick patterns. Now get out there, put this knowledge to work, and start spotting those trading opportunities. As always, I'm rooting for you every step of the way.